if you're looking at it through a traditional lens and you're either going to go raise a bunch of money or you're going to go get, institutional financing, there's typically a lot higher of a monthly payment that you're going to be dealing with. So you're not going to be able to cash flow it as well. Compared to if I approach a seller and I say, hey, I need my payment to be here, but I'll give you your price, then now all of a sudden we can walk into a lot more cash flow versus having to raise the debt.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Zachary Beach is a 3-time Amazon best-selling author of Real Estate on Your Terms. He's also the CEO and partner at Smart Real Estate Coach. And lastly, he's the co-host of the Smart Real Estate Podcast. Zachary, welcome to the show.
Sam, it's a pleasure, my man. I'm excited to be here with you.
Absolutely, Zach. The pleasure is mine. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
100%, 90 seconds. You're talking like Massachusetts here now, so we'll fly through this. So I was a bartender and personal trainer just a short 9 years ago, and I was burning the candle at both ends and was getting extremely exhausted and tired because, as you can imagine, late nights and early mornings. So I actually approached my father-in-law, who's now my business partner in multiple business ventures. And at the time he was revamping his new real estate business as he got crushed in 2008. And he was, coming out of the crash and got involved in this thing called creative financing and real estate investing. So I ended up joining him, and then about 6 months later, I was able to get my first property under contract, my first creative financing deal. I went ahead and burned the candle at both ends, or burned the bridges, I should say. Dropped every other job except for real estate investing, and from there on out, just continued to build up that local buying and selling entity, and then also grew a real estate coaching business at the same time, and kind of brings us to where we are here today.
Man, that's awesome. I love that. I guess there's a few things here that I think some of our listeners would pertain to them. When you said, hey, I'm going to approach my father-in-law and say, can I work with you? Can we learn how to, can I learn to do what you're doing? Or can I add value to you in some way? What was that conversation like then?
Sure.
And then how has that changed?
Yeah, well, the relationship's dramatically changed, right? So I was 24 years old. It was December of 2014, and I was approaching him because I was exhausted. Me and my wife I remember it was one morning, it was like 4 a.m. because she was also a bartender at the time. It was like 4 a.m. and we looked at each other and we were like, we got to figure out something else. And
right.
We were in bartending for about 4 years. Of course, it was a blast. It was like my second college, but there was a time and a place, and now was the time to make the transition. So I said, hey, I don't know if I'm going to like real estate investing, but maybe I should talk with your father and see if, we could fit into his current business and see if we can create something bigger, because I'm extremely ambitious and I know he is as well. And let's see how we can take this to the next level. So when I approached him, I said, I don't know if I'm going to be good at this or not, but if you'd have me, I'd be interested in doing some things in order to generate, some value to the company. And I got the sexiest job in the world. What I got was a list of names and numbers of expired listings, people that had a property on the market at one point in time and it didn't work out. And he said, call these people. I'll work with you on your sales scripts, and let's try to generate some warm leads. And once we start moving those leads through the funnel, then we can go ahead and start making some offers and trying to do some deals together. And that's kind of where it all started. And really, at the end of the day, we kind of ate what we killed. So it wasn't that he was going to take a massive risk on his end, but eventually, I ended up taking a big leap as I started to learn it. And then eventually said, if I'm going to really be a real estate investor, then I gotta really focus, and I got to cut everything else out. And, I did that after about, 4 to 5 months in the business, and can hit the ground running from there.
Wow. Okay. So you made an important point there. You said, eat what you kill. So you brought value, in father-in-law or not, this would pertain to any business relationship where you're looking to learn from someone who's ahead of you. And I think that's, the name of the game is how to scale commercial real estate. And I certainly have employed that tactic where it's, how do I add value to you? What can I do now? Maybe that isn't asking you to write a check so I can come to work for you per se, but yet I want to work directly
Sure.
with you. So I love the way you approached that and saying, hey, eat what you kill. You went 6 months and you got your first deal under contract. So and he handed you a list of names and numbers and said, hey, call them up and just see where it goes. What was that process like? And I guess, it sounds like you had success with it 6 months in. So tell me how you stuck with it.
Yeah, it's mindset is everything, right? When it comes to real estate investing. And the interesting thing is I still use that skill set today, right? It is the building block of real estate investing in my perspective, which is communication. Because once you communicate properly with people and solve their problems, understand their motivation, understand the financials, I don't care if it's single family or commercial, once you're able to communicate and solve people's problems, well, that's where the real estate deals come into place. Any brand new real estate investor that I communicate with, I'm always like, this is not a real estate business. This is a communication business. This is a people business. And once you're able to solve people's problems, well, now you're going to be able to really start to be able to build some wealth in real estate. So that's what I built upon consistently. And that's why I say, like, to this day, I still use that skill set. Because if we enter into a new market, I just say, give me a list of expired listings and let's start talking with some sellers in order to get some deals done. Get straight to the source. So during that process, I mean, it was hard. I mean, for the first 2 to 3 years, real estate investing for me was hard. It wasn't natural to me. Although, may say, well, you're a bartender, you should be able to speak with anyone. And that may be true. But if you have zero real estate experience and you don't understand how the dynamics of a real estate investment deal, whether it be a traditional mainstream deal or say a creative off-market deal, that's still in a huge learning curve that you got to take on as well. So it was hard and it was challenging. And the only way I was able to really stick with, building this out. And as I started doing real estate deals, I started to find the love for business in general. And the only way to be successful in any type of business is to consistently work on personal development. So I found myself, listening to, while I was setting up the bar, and I just started, doing real estate deals, I was listening to Jim Rohn, not music. I had my headphones in, listening to personal development. So what I noticed though, was as I continued to work on myself personally, from a mindset, from a personal development, from a behavior standpoint, that my real estate career started to get better and better and better. So then I started to make that connection that said, all right, if I can control what's up here in my mind, then, the business is going to grow in itself anyways. I think I can't quote the exact person that used to say it, but they said, your income will never outgrow your development. So then I just started focus on how I could develop better in order to increase my income and increase my wealth long term.
I love that. And that's so true. That is so true. Your income will, and I couldn't have said it that way, but I like it. Your income, how'd you say? Your income will never outgrow your development?
Yeah.
Something to that
exactly,
extent.
yeah.
That's really cool. And you've transitioned, I think, even in your roles inside of the company. I mean, the company obviously is not what it was 9 years ago when you came on board knowing nothing about real estate. So what have those role and kind of transitions been for you as you've grown the company along with your father-in-law?
Yeah, what's interesting is since I would say day one, but since probably about the first year that I started investing in real estate, I've always been simultaneously growing two companies at the same time. So it wasn't like I've ever just invested in one. So we have our own personal buying and selling entities. So we still buy and sell real estate with the exact techniques that we teach our students. So we have our own portfolio in Southern New England. And then at the same time, we have a real estate coaching company that teaches people the exact same strategies, tools, techniques, process systems, tools to grow and scale their creative financing business as well. So we've always had those two businesses simultaneously growing. So I've evolved in both, right? I've evolved from being, from day one, being a virtual assistant, basically, right? Of somebody that's prospecting consistently. And then eventually I became a very well-paid virtual assistant. And then eventually got to a point where then I was heading up all the entire acquisitions. And at one point in time, me, my brother-in-law and father-in-law with a couple support staff were doing 4 to 10 deals a month. with creative techniques that most people, either aren't aware of or say that it doesn't exist, like owner financing and subject twos and lease options. But then at the exact same time, I was also, the COO of our coaching company and a coach, teaching people how to do this and helping them acquire real estate into their portfolio. Then eventually, as that started to evolve, became more in a deal structure mode on the investment side, and CEO of the coaching company, which happened over the past 12 months.
That's awesome. So let's go back to this very first deal. You're looking for commercial real estate, or even maybe at that point, residential real estate. I don't know. But what's
Primarily residential at that time.
At that time, okay, primarily residential. But so let's fast forward maybe then to now. Like when you're looking for commercial real estate for, because you have two companies you're running there for your own personal investing, what's your buy box on other finance deals and why?
Yeah, I actually got this question asked for me like just yesterday, because I'm communicating with this with a gentleman, and he's been providing, say, leads because he does wholesale fix and flips, but is trying to get involved in the creative space. So he's been providing leads, and I've just been sharing with him how I've been doing it. So he asked me that exact question. So he goes, "How do you know that this one is a good deal?" And I said, "Well, first and foremost, the seller said that he's open to creative terms. I mean, that automatically jumps to the top of my list. Considering that the challenging part of the conversation is asking the right questions to understand motivation, but then understanding the challenge that can be solved with a creative financing technique. Because everyone, and I mean, literally everyone, has been taught one way of buying real estate, typically, if you're brand new, and that's through traditional means. You go, you work hard, you get 20%, 25% in your pocket, you go put it down on a piece of property, then you go ahead and you go get the rest of the financing from a bank or an institution, and then now you have, doesn't matter if it's a single or a multi or commercial, now you have a property. And that's how everyone's taught. So most of creative financing is an education process for the seller. So it's, okay, Mr. Seller, I understand your problem. Here's how we can solve it. And here's some techniques that we can utilize, or some different strategies that we can utilize in order to get you to, their end motivation, whether it's they want tax or estate planning benefits, whether they want a higher price, whether they want cash flow on the property. It's just now providing that solution. So that's step number one. That's what I always want to know. Number one is, I know it's a good deal if somebody's open to it. Or at least I know that that's the hot lead. Then from there, it's what types of terms can I create with that seller? Because just because they're open to it doesn't mean it's a good deal, but it's definitely at the top of my list. So now I need to understand, it's typically 5 terms that are involved in, say, an owner financing deal. So owner financing would just mean that we're going to take out the bank, and we're just going to go direct to seller. The seller's going to be your bank. The seller's going to finance the property for you. So there's typically a handful of terms that are involved: purchase price, down payment or not. We have lots of deals where we put no money down. We have, if there's an interest rate or not, there's lots of deals in which we do that are 0% interest rates. We have, length of time, and if there's a monthly payment. So those are like the generic terms that we're going to be now crafting. So once we've established those, and now those terms make sense for us to buy, meaning the terms look good, we're going to be able to acquire it. We're going to be able to cash flow it. We're going to be able to either have our exit in mind, or know that we can keep it for a certain period of time to improve the value of the property. Now, once I have that, now it's okay. We got ourselves a good deal. The motivation's in line. The finances are in line. Now let's just figure out the best way to go ahead and close on this.
What type of assets are you buying right now, assuming purchase price, down payment, interest rate, term, which all of those then equal, of course, your final payment.
Yeah.
But what type of assets in the commercial real estate space are you acquiring right now that makes sense?
Yeah, it's a good question. So we've acquired our own commercial building that housed all of our offices. I also house an Allstate and a couple other local businesses, so mixed use. But we also will acquire multifamilies, typically up to 10 units. And it's not because like we're not willing to buy bigger units, it's just because usually up to 10 units are mom and pop shops. So they're more open to doing a creative strategy like owner financing. Because it's usually, if we get a hold of it, it's been either inherited or they've owned the property forever, or talk about what happened with COVID. You have a certain amount of vacancy, or you have a certain amount of people that are not paying, and you're going through evictions. For a mom and pop shop, if that's their only building, or they only own a couple of them, that's a big hit for them. And now that creates a big fear factor. So we'll go ahead and buy properties just like that as well. And so we'll just accumulate them in those lower unit ranges, because typically if you get past 10 units and above, you're starting to deal with more of a institutional or other investors like ourselves. And it's just not as likely for you to go ahead and get good terms that you want to go ahead and acquire on owner financing.
Right. And you made a good clarification there on typically who the owner financier,
Yeah.
I don't know, whatever, who that is, right? It's like, oh, okay, it's going to be a mom and pop. They're not going to have a massive portfolio, probably. Maybe they do, and they just can't get rid of it. But so I like the kind of clarification of who the type of potential owner finance seller is. How do you not wind up with dog assets? Because if something's an expired listing, like, or maybe I could ask that a different way, which is, what are the things that typically lead to an expired listing that then make it a desirable acquisition for you?
Yeah, and I'll give some clarification. So if we're buying commercial, it's typically off market. They more than likely weren't on the market at this point. So single families, we acquire a lot from expired listings.
Sure.
So typically, if we're going to go after multifamily, we'll do a specific mailing to a free and clear list. Man, you can grab those on PropStream or whatever database you're using. Debt-free houses, usually they own at least one, if not multiple buildings are attached to them. And of course, I mean, you love an out-of-state owner as well, especially if they're a retired landlord. So just approaching those, and then we'll send out a mailing. And if we get one deal out of each mailing, which, costs you, a couple $1,000 in succession, then we're in a good spot. And to tell you about like dog listings and things like that, again, the two things that we tend to care about are the motivation of the seller and the finances on the property. Because, if you're looking at it through a traditional lens, and you're either going to go raise a bunch of money, or you're going to go get, institutional financing, there's typically a lot higher of a monthly payment that you're going to be dealing with. So you're not going to be able to cash flow it as well. Compared to if I approach a seller and I say, hey, I need my payment to be here, but I'll give you your price. Then now all of a sudden we can walk into a lot more cash flow versus having to raise the debt and the equity on the property and no way I have to pay more people or an institution. So we can actually walk into properties that you typically wouldn't be able to cash flow as well. And then of course, the end result would be one of two things. Either we'll hold on to it. Secondly, if you wanted to, even though we typically don't, you could fix, improve it, and then refinance it and keep it and bring in some traditional financing, or do what we've done with a couple of our multis, which are go buy them on owner financing, make principal only payments for say 48 months on the property, improve the units, turn up the units, now improve the cash flow on the property, and then let some of the bigger investors out there that are looking for units go ahead and acquire your property at a higher price because you've established the rents and made the improvements on the property.
Right. That makes a lot of sense. What do you do to inspire confidence in your sellers that you're going to perform?
Yeah, that's a great question, right? Because that's at the end of the day, that's what everyone's looking for, especially if they first get involved in real estate investing. A lot of it is, some of it I lean on, we got a history, right? We've been doing these deals. I've done or participated in pretty close to 500 creative financing deals at this point in time nationally. So I can lean on that. Secondly, a lot of it's just positioning. At the end of the day, if you want the deal, you need the deal like you need water. Sellers can tell. So just keeping a good positioning and don't try to ever force a deal, because it's never. One of my coaches said this really well, and he said it's not your timing, it's the seller's timing. So It's all about following up and being consistent and being helpful. But most importantly, I think what I always try to do my best at, and what we teach our students is to not prejudge the asset or the person. So we have this thing called 7 steps to a taken, which is basically 7 steps to acquiring a property. And our comps and comparables is actually step 5, not step 1, it's step 5. And the reason why is because I want to meet the seller. I want to see the property. I want to have an open dialogue without any preconceived notions before I start negotiating. Because usually the seller is going to tell you what they're looking for and what they're willing to do. Now, doesn't mean that that's exactly what you need to do, but they're going to tell you. And if you have preconceived notions of, hey, what about that property? And what about that property? And, what's going on here? All of a sudden, you're already on the opposite side of the table with the seller. So we always want to get on the same side of the seller, same side of the table as the seller. That way we can now show them a solution. And if the solution works for both parties, then you got yourself a good deal.
Man, that's fantastic. Zach, thank you for taking the time to come on the show today. This has certainly been enlightening. I've learned so much from you. I love your story. Going from bartender and personal trainer, man, you were literally grinding it out, like you said, going to bed late at night and then getting up early morning and probably doing personal training and everything in between. And you've really just gone out and done some really, really awesome things. It's been cool to see the way you have grown both your personal investing business, but also your coaching company, the way you guys approach creative finance, finding deals off market, the types of assets that you buy. You've dropped a lot of really, really good stuff for our listeners here today. So I certainly appreciate it. If they do want to get in touch with you and learn more about you, what is the best way to do that?
Yeah, absolutely, Sam. I appreciate that. So I want to make sure that anybody that's interested in creative financing, any of your listeners, that we're able to get our Amazon bestselling book in their hands for absolutely free. And I don't mean like a PDF. I mean, we'll actually ship you the book to your house. All you have to do is go to wickedsmartbooks.com/Sam and the number 3. That's wickedsmartbooks.com/Sam3. Go ahead and grab our first Amazon bestselling book, Real Estate on Your Terms. We'll ship it out to you, and probably some other goodies in there as well. Now you can start diving into what it actually means to become a creative financing real estate investor.
That's fantastic. And if you're listening, yes, indeed, they will ship it for free. I got my own copies here in the mail about a week ago. I think there were several books there in that package. So thanks for sending those on. I haven't had a chance yet to dig into them, but they are in my queue of books to read. So Zach, thank you again for coming on today. I do appreciate it.
Yeah, thank you, Sam.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.